I want to bring in Dhirendra Kumar now. We're going to try and find out if these tech funds, and we have quite a few of them in our market, if they in fact offer enough value for us as retail investors. Now, if we look at those charts, they've moved up very sharply over the last couple of weeks in particular. The last 1 week, fortnight, also over the last year, tech funds have returned 23%. That's the category average compared to the Nifty has returned about 14%. Now, several of these funds are very heavy on Infosys. Dhirendra, do you see value in these funds given where the rupee is right now? Do you think it makes sense for some of us to add tech funds to our portfolio for the short term perhaps?
No, not really. Mutual fund investors should not be focused on short term. And I would say that, if you just find your fund to be very low on technology, then there could be a very limited case. But my sense is that if you are holding a large cap fund or a larger mid cap fund, any diversified equity fund, whether it be a tax saving fund or any generic equity fund, then those funds will be reasonably weighted in, they will have reasonable weightage in technology. Which stock, but there are, and the technology universe is also not very large. Five stocks will account for about 80-90% of the technology exposure of mutual funds in this country. So most investors, if they are investing in any generic equity fund, they can do without it. But I would say that even if you are a little overweight on technology in the long run, I don't think it's going to hurt, because despite all the noise around technology, I still feel that compared to most other sectors, it is a reasonably good growth story, despite and a decent return on equity situation than compared to any other generic sector in the economy.
Well, Dhirendra, if we look specifically at technology funds, we have SBI IT that's right on top. It's given a return of about 26% over the last year. But the lowest performing fund has given a return of 21%. If as an investor I'm looking for a specific technology exposure, does it make sense to pick one of these funds? Which one would you recommend? Do you think they're largely similar?
I would say that there isn't much difference, and it's very difficult to guess which fund will do well over the next 1 year, 2 year, 3 year, whatever be your time frame. And it's a very difficult call. And also, if you look at longer term return, the return, they almost converge. If you look at even this past 1 year, the best performing fund happens to be 26%. The worst performing fund also is about 21.5%, which you won't regret. Likewise, and if you take it to 4 year, 5 year, 10 years, I think, they get, and the reason why the returns are very similar is also, you can see in the portfolio. 5 stocks account for about 80% of all these portfolios, and Infosys accounts for 30, depending on individual fund managers' preferences, still ranges between 30 to 50%. So think of a fund you are buying, and it happens to be to have a 50% exposure to Infosys or 35% at the least. So the return is unlikely to be very different.
All right, so those technology funds are largely similar, and you'd be better off picking an equity diversified fund. We have a question from one of our viewers for you, Dhirendra. Prabir has written in. He's invested in the ICICI Infrastructure Fund through an SIP for the last 60 months. He's been investing 3,000 rupees a month. He is very disappointed with the way the fund has been going, and he wants to know, for the long term, should he continue with this investment, or is it time for him to move his money away? Infrastructure funds, like we talked about last week, have not been doing very well at all. What should he do with this particular investment?
No, I think he should give up on this investment. We have been expecting a turnaround, but going by what is happening in the economy, going by the pace of things, going by where our interest rates are, things don't seem to be we are unlikely to witness a turnaround. And it's better to diversify. I'm not saying that get out of this fund and be out of equities altogether. Long term, I'm still very optimistic about equity, and its potential to be the best performing asset class, and particularly, investing through lean times becomes very important. But few things which he has got it right in terms of investing regularly, but not diversifying enough could be a disadvantage. I would like him to switch his money from this infrastructure fund to a large cap fund, or the ICICI Prudential Discovery Fund. Split his money, all his accumulation, into these two funds, and split his incremental SIP investment as well into these two, and equally.